just to give you a couple of pointers, I read a post by First Post a couple of days back, and there's some 5 trends which are emerging very, very strongly in India. And one of them is India has surpassed every nation, including China and US, in digital financial transactions. Yeah. Not only that, the overall transactions are to the tune of 48.6 billion real-time payments through 2021. Now just to put a context to that, China, which is 4 to 5 times the size of India in terms of GDP, has 18.5 billion transactions as compared to India's 48.6 billion, which means we are growing at 2.5 times of an economy which is 4 to 5 times bigger than us. Yeah. So if you just create a simile between the two markets, as per what India should do, we are growing at 10x when it comes to fintech adoption in India. Also, you'll be surprised to understand that India has 87% adoption of fintech as compared to the global average of 64%. There are some 17 unicorns which have been established already, and last year's funding itself was close to $8 billion. Yeah, so these are some big numbers, and I would just want to introduce the panel here. So Apurv from Jupiter, welcome him please. Deepak, hi Deepak. Deepak is from Rupeek. Anil ji from FlexPay. Yeah. Swapnil from Niyo. Yeah. I'll just ask them one question, which is the overall starting point of the entire discussion. Why is a wide network important in fintech? Especially so when we are growing at a very fast pace. Is India doing something which is different from the rest of the world and their point of view?
Yeah, so certainly, any network helps. It's not just the, fintech as such. And given the pace at which we, want to grow as a fintech, the already, existing infrastructure and things can, really help to leapfrog all the points in between. Where say think about infrastructure existing like NPCI, UADI, the government help, the whole digitization drive and things like that. Then basically you don't want to start from the scratch where you look at your own expertise in terms of what you actually can bring on the table for the customers, and where the existing infrastructure from the banks can be utilized to actually reach out to the customers and solve, say, what are the financial problems they have. And that's why the fintech exists. And it's not that just last 5 years or 6 years we are talking about. It's like start from PSUs, then the newer banks came in, ICICI, HDFC, Kotak. They were also fintech of those times. Then now in last 5-6 years, right, whatever these banks couldn't solve for the customers, now the newer fintechs are solving using their networks, their everything, and this finally it's about solving the customer problems in a
very startling data which I came across was if there are 2100 plus registered fintechs right now in India, 67% of them were established in the last 5 years. So is there something which is changing particularly in India?
Yeah, so it's also an ecosystem which is evolving, right? Think about the whole e-commerce thing which happened to India. Flipkart, the pioneer of it. Then basically, obviously we know the one who has been successful. I'm sure there were like lot many companies at that time. Amazon came in, customers started doing the online transactions. The shift was happening from offline to online. This is more about the convenience. Think about who wants to go to a branch, just for the banking, which could be done online, right? Now there are some people in the segments who actually want to see a branch and want to do, but there are always the segments where the problems are different, and then there exists the fintechs who actually solve it differently. Sure. So it's all about that, starting from the customer needs.
Your take on the same question?
Yeah, I think the biggest factor as to some of the stats you talked about, how India is successful. You talked about 48 billion real-time payment transactions, and if we take away the card portion of it, card portion is about 5 billion. We are probably the only country in the world which is doing 40 billion non-card transactions, which is almost unheard of. Compare it with a country like US, where even today, I'm from the lending business. I spent about 18 years doing consumer lending in the US. And the biggest challenge in US is once you deposit a check or send across an ACH request, you wait 5 days. to know whether you got the payment or not. And you don't even know. You'll only know if it didn't clear. If it clears, it is assumed after 5 days, but it can happen after 14 days, you might get a return on that. So in the most evolved economy in the world, it takes 4 to 5 days to know a negative on your check deposit or your ACH deposit. Whereas in India, ACH deposit is also the same day. It is probably the only country in the world where the check and ACH deposits clear in the same day. Why did this happen? Because the government and the regulator in India is the most forward thinking. When we talk about the network, and for fintechs, the network that is the most important network is the consumers. What did the government and the regulator do? They gave us Aadhaar and a billion people who are biometrically identified. They gave us NPCI, which launched UPI, and it is the most sophisticated, most evolved payment systems network in the world, bar none. I mean, there isn't anything that comes close to it. You're talking about a digital transaction that is happening with a QR code in real time. We have overcome the point of sale machine problem and everything else, and because of demonetization and pandemic, there's been widespread adoption. So we have these billion biometrically identified people. It's about 700 million of them are carrying a phone, most of them smartphones, and now they're all doing digital transactions. And all of this has happened not just because some smart company innovated. It's because our government and regulator were forward thinking and have presented an opportunity for fintech organizations like ourselves to innovate using that ecosystem. And that's why I think we, as an ecosystem, as an economy, as a digital economy, are far ahead of the rest of the world. And as a lender, I love the fact that most of my customers make real-time payments on UPI, and I know that the payment happened in seconds, not days. Or even if someone chooses not to make the payment on that day, I deposit the ACH and the notch mandate, and we get to know within the same day. And what kind of efficiency we are talking about, and in terms of managing delinquencies and managing unnecessary calls, and all of this is possible mainly because of our forward-thinking regulators. And I think everyone in this room has to be thankful for that we are able to leverage that and innovate on it. Now, as companies, we can just be consumer focused instead of trying to solve a KYC kaise karenge and all of those problems, a payment ka reconciliation kaise karenge. All of those problems have been taken away for us. So that's the greatest thing about our nation right now.
Thanks a lot, Anilji. And yes, absolutely. The rural India, I think I read a report a couple of years back. The digital penetration of rural India is already 20% ahead of the metros right now. Not in terms of percentage, but in terms of actual numbers. So we know where we are heading right now. Thanks.
Yeah.
Deepak?
So, no, I agree with Anil and Swapnil also on their perspective. And like government and regulators are putting in a lot of emphasis on how to set up the infrastructure, how to set up the network to basically get better financial inclusion, get the products and get more and more population access to the means and the right form of credit. And like today, NPCI of course has done a phenomenal job. There are so many payment apps and so many account aggregators and other players who have basically come together to share access to all the data they have, and which basically enables multiple lenders to underwrite credit to basically all the guys who were not able to get it earlier. So it is definitely helping in both increasing the breadth and increasing the experience at which basically the lending is being able to get to the masses today.
Apurv, your take on the same question?
Yeah, I will just pick up from where Anilji ended, that consumer is the network. And why so? Because banks did exist, they had a large network. Lending firms did exist, they had a large network, especially offline. There were investment firms out there, brokers out there had offline centers. But when did disruption happen? Disruption happened when there were innovative products by fintech. Of course, the regulators did facilitate development in the ecosystem, and we knew that once regulator laid clarity and helped with the pathway of UPI, it became a story and UPI adoption became a story because of the distribution channel of the customers, which was laid out by the fintech payment players out there, not by the banks, by the way. Otherwise, bank should have done that. So precisely coming to it, that disruptive product led to this entire disruption in the fintech ecosystem. Still, as I said, there were lenders, but how to do credit to the needy at the right price, or how to give the right advice to common masses for their wealth management needs, nothing was happening in that perspective as right that could happen afterwards. And now, for example, with respect to our case in terms of banking, we are again awaiting certain clarity in terms of how digital banks could be established in India, wherein there might be minimal or no physical branches out there. And I'll be very honest, when we do our user research also, we ask people that even though their decisioning around their banking is by trust, does physical branches manifest trust? Maybe not. Because when we ask what are the pain points, customer experience is the biggest of the pain point. And we ask and we try to list. In fact, I'm talking to top 5 issues. They'll say long queues, need to go to the branches, less of transparency, less of assistance by the bank staff. Even for the likes of who have good digital banking app also along with the traditional banking setup, even then in that case, they will say that they merely digitize the process to a partial level wherein the service is not entirely full digital. You still need to go to the branch sometimes. There is a bad UI UX experience. The app crashes sometimes. So all I know is that you have to own the consumer, and the consumer with the laxity of internet penetration in India to this extent, where we have 834 million people in India now having accessing internet out there. I think it's all about we penetrating Indians on internet, and that will be the network of future for all the fintech players in the country.
Thanks a lot, Apurv. In fact, you killed partially one of the questions which I was actually following up with. But nevertheless, the question is basically all the digitization which is happening in the country. We see a wide network now. Yeah? You have banks with no physical banks. Yeah, you are giving away money, but there is nobody to interact with the consumer. In that situation, how do you instill customer confidence? Because if I face a problem today with ICICI Bank, I go to the branch, I maybe discuss and I sort it out. Yeah? But when I'm talking to a Niyo bank or a Jupiter bank, or for that matter with Rupeek or FlexPay, how do you instill that customer confidence that our services will be much better and our turnaround time or anything to do with confidence, we can actually do a better job here as compared to the other banks? One of you. Apurv, do you want to take that because you already had touched it?
I'll just start from a banking reference. So, as you said that the banks do have a physical presence, and hence they're still able to instill that confidence in case of an issue.
I'll just add a question on top. I'll just give you a perspective. I've been handling a couple of clients like Install and Pickup. There was a time when we were saying that, listen, we are in a different model altogether. We are online jewelry. But then Gaurav realized that no, there is a requirement of a brick and mortar store just to give a feel to the client customers. Even Pickup for that matter, I saw that they also came up with a physical store that this is the place you can buy and sell. So is there a challenge coming in future, or it can be tackled?
Okay, so I'll just tackle that question with our understanding that I do get that prima facie you always feel that if there's an issue, there is a branch to take care of it. But as I said that no one wants to have an issue in the first place in itself. Why to visit a branch to get that issue sorted? And as I said that the user research tells you clearly the customer experience out of that branch visit is the biggest friction point, and is actually the point that will help us to make him switch to digital banking. And when I say digital banking, I really don't want to talk about the digital banking apps that everyone would have. I think they are mainly, I would still say some apps just digitize the process. They're not digital first. So when you're digital first, account opening, I think with the likes of the Niyo banks, they did enable account opening in 5 or 7 minutes out there. So even with that basic functionality of account opening, the ecosystem got a really nice traction in terms of account open figures, what Niyo or Jupiter or FiCoach. And we were overwhelmed to see those figures because it was a basic service of account opening that we enabled just in the beginning, and people just flocked to us. After that, as I say that, It's about the consistency of the services that you enable on your platform, which builds in that confidence rather than hinging on the fact that I don't have a physical branch and that might be that might not help me scale to the extent that I would want to scale. Even to the extent I would say that when the budget got passed this year, I think when the digital banking units were when the finance minister said that we'll be establishing the digital banking units out there in 75 districts of India, the entire intent of, and if you read that, it is basically around how that those digital banking units or setups in those districts will run to make them self-serve everything on that platform, so that next time they don't need to visit that setup, by the way. And those setups are just so that you could self-serve yourself in terms of anything, right from account opening to assessing your need of credit to enable credit for yourself, everything. So they also don't want, and that is what the entire ecosystem is now trying, that maybe we could serve everything online in such a seamless experience that there is no requirement of going to the branch. And even if there is an issue resolution that requires someone to reach out, maybe we have a minimal branch, minimal physical setup. And I'll tell you, good players have done that in the ecosystem. I know I'm just quoting about cities except in India, but back then they had only 45 branches, and they mainly used their branches for branding, by the way, in India, especially because they were good enough to provide services back then, also a bit of them in online or in person, but majorly in person because of the target segment. And as I said, it also depends on the target segment that you're serving to. So if you're serving working professionals in top 10, 15 cities of India, toward which I see the existing neobanks serving more too, I think those people don't want to come to the branch. Those can be served online. It's just about providing that right product and right service to them online. Those working professionals order food online. They want to bank online. They get cab at home. They don't want to go to a taxi stand. They don't want to go to a restaurant every night.
Are you coming at a point, Apurv, that there is a different strategy for metros versus, the top one and tier 1, tier 2 towns versus rural penetrated markets? Where
I'm just saying
presence might give some more confidence.
Correct. I'm just saying that it's just about so there is something like feel and touch. It's just about feel and touch. Maybe in future their behavior, their expectation would be the same as a metro guy. They wouldn't want to step out. They wouldn't want to disturb their daily wages in order to go to a branch to get abstain away from their daily wages. In fact, for them it matters the most. Why a branch visit for issue resolution or for availing a service when at that day they could have worked and gained some money? So it's about the feel and the touch, trust and confidence that they would want in the initial phase. But after that, I don't think no one would want that.
Mobile and they are moving up the ladder. At that point of time, there is no need for, and it only brings friction in.
Indeed.
Yeah, so my understanding and my take is that customer is the king. Customer experience matters most. And what is customer actually asking for? Customer is asking for the right kind of information, all the information available to them transparently and in the fastest possible time they can get that. Can the branches provide that? In some cases, yes, but not in all cases, because either, as Apurv also mentioned, you have to stand in long queues, you have to wait, you have to take out time from your busy schedule. So all of that basically is still a friction point, although it adds to a certain trust factor because there's a physical presence. But I think the key problem of the customer is information available to them in the fastest possible time, right? And for that, I think the digital solutions work better. Digital works in multiple ways. It can be a chat medium, it can be website, it can be telephony, but branches are not necessary from that perspective as long as the customer experience is getting solved is what I believe.
First up, we are not giving away money. We are giving a loan with the full expectation that they'll repay us. So, kind of touching upon what Deepak and Apurv said here, obviously the customer experience is the key, and trying to have a seamless customer experience where the information and the transaction can be accomplished without even a human interface is preferred. But I'll go a step further. In our case with FlexPay, we are dealing with a market where we are heavily focused on low-income consumers with less than 30,000 rupees income, less than 20,000 rupees income. Now, as a lender, if what is my competition? Is a bank a competition? Even if they have a branch, once you say I have 20,000 rupee income, there is no loan product available to them. Or if I say I need a loan for 50,000 rupees for 5 days, there is no loan product available to them. Now, in those cases, what are we competing against? We are competing against access. We are competing against the people just not having basic credit access by the traditional banks and traditional NBFCs. So, in some, when you're solving access problem, as long as you're able to do it, the trust is earned by the experience you provide to the consumer. And the need to earn trust because there is a big physical branch is slowly going away. And Apurv has cited several examples across other businesses. It probably is a little more challenging when you have to take money as a deposit. I would understand that. But when you are taking money as a loan, it's probably a slightly lower threshold to cross. However, having said all of that, if you are unable to provide a seamless experience, the customers will still not transact with you. That is the basic expectation everyone has.
You want to make any new point, or you want to just react?
Yeah, I think most of things have been covered. Just one thing which I would like to add is think just step before this, which is like consumer has the option of say physical or say branch bank versus a completely online bank. Right? How do I make a choice? Is like a physical presence is necessary. Well, if I look at the whole ecosystem wise, like in the last 10 years, people now like more than 200 million are actually users on UPI. They trust the online completely online payments. So based on those evolution in the society, the country itself, now it has the whole requirement of physical branches and things have gone down. Especially if you look at the whole country as such, right? In terms of population, we are a very very young population we have. So it becomes easier, but it's not like a solution for everyone. There has to be, we need to really identify the segments, their needs and all. I mean, I can't actually expect my grandparents to, say, here is Niyo, why don't you go for it, right? So we really need to see, what consumers, have their ask about, right? And then just solve for it.
Makes a lot of sense. So actually, a follow-up question to that. In this growth story of India in the fintech space, I just want to ask your point of view on, were there some great innovations or some great work done in the last 5 years which are worth remembering or mentioning, or there's some regulations which were brought in? And in fact, Apurva, you saying one is about to come and you were actually waiting for one of the regulations to come. But are there anything which is worth mentioning here in this forum, that in the last 5 years, India's story is very bright? And there are these two things which I clearly remember. Maybe they are the reasons why there's a paradigm shift right now in the industry. Anyone?
Yeah, so if I start from the definition of innovation, right, like doing something in a newer way, which increases the efficiency, effectiveness of the outcome as such, we look at. Now, I mean, Niyo started back in 2016, and always the aspiration to go for, just delivering the banking services in a digital manner, right? But at that point of time, the partners, the banks, the traditional banks and all those were not ready. Now, the only thing which, they changed was to provide APIs, right, for the better integration between, say, whoever wants to deliver the banking goods or the products or the services in a much more customized manner, personalized manner on top of them. Now, just bringing in this API infrastructure in between, which is, I won't say as like we can't imagine it as an innovation because it was all around the world. But if I think from a perspective that, yes, these are the traditional banks, now they have brought in this, which now can solve the customer's problems in a far better way. Now, this is just from a partnership network perspective and all those things, right? But around the whole ecosystem, it's like we have already talked about NPCI, UIDI, which have solved for the onboarding process, which Apurv was talking about, right? So these have added to the whole convenience part to the customers. So it's not like, the innovation part, but say, I can take another example, say, think about zero markup forex card, right? It's not like, infrastructure problem or anything. It's just that, okay, the customer had this need, travel abroad, and existing banks were charging, say, 3 to 5% of commission. Can the fintech come in and think about, okay, how can I solve this problem in a better way? can we make it a zero markup on the exchange rate without taking any commission and all those things, and add value to the customer and the experience overall, right? So there are small innovations
So, no,
which
no, no,
happen.
I completely understand, Swapnil, but my take is that if I'm talking about India on the whole, because this problem is for people who are traveling abroad, which is a very niche segment right now as compared to the population. Therefore, maybe a question which is slightly more broader. So, anything, Anilji, which you can think of?
Yeah, I mean, obviously we talked about UPI, API, but if we are looking forward, there are 2 or 3 different things that are on the anvil which are very important. One is the Sahmati based account aggregator network, which is putting the power of data ownership back in the hands of customers, so that there is informed consent and making sure that data privacy and security are respected. So that's one. The second initiative that is in the works is the OCEN, which is the Open Credit Enablement Network, which is a network of lenders as well as market makers to bring together a free market lending marketplace kind of environment. And the third one, which is currently a lot of activities being seen, is on the ONDC, which is trying to bring the same thing on the commerce side. So a combination of these 3 initiatives, which are all kind of public-private partnership driven right now, will drive a lot of adoption from the common consumers, but also are giving more tools to fintech companies like ourselves, where I can see myself being a part of ONDC network and enabling commerce purchases, leveraging the OCEN network. So, getting informed consent from through the Sahmati framework. So that kind of a world we are about to step into. These are some things that are still not fully functional. This is why, like UPI was at a not concept but almost pre-implementation stage. All of these 3 projects are all. I mean, account aggregator is almost is live and is working, but the other 2 are slightly in pre-implementation phases. But once they do get implemented, we should say see change in the services that we can offer.
Point basically brings out that fintech is growing fast in India, but the growth is only going to go steeper from here with these innovations coming into play. Lovely. Deepak?
Yeah, definitely. So I'll add to what Anil have mentioned. There are 4 big changes which I see, 4 big innovations which I see has happened in fintech lending space particularly. Account aggregator and OCEN, Anil has already mentioned. The other 2 which comes to my mind, one is Aadhaar. Basically, it gives an unique identity to each and every individual, which basically helps to have a better identity management, which is one of the crucial thing to do in lending space. And the 4th thing is basically co-lending, which is regulators are coming up with the second guidelines about a year back, and that enables banks and fintech spaces, fintech companies to work together, where both of them are able to leverage their strengths and able to basically create solutions which can go to much larger base and penetrate much better in all parts of the Indian market, right? So these are the 4 big innovations, I think, which are really giving us the tailwind
Thank you,
to the
Deepak.
market.
You want to add on top of that anything?
Very quickly, UPI and Aadhaar-based KYC were, I think, the innovations that led frontier for a lot of fintechs out there in the last 5 years. But just talking about, even if you map who is going at what rate within fintech, and I map the landscape like insurtech, lending, or otherwise SaaS fintech and all of that, neobanks are still not projected with that much growth rate, just because we are still awaiting clarity, maybe whenever next year or maybe 2 years down the line, around how the full stack digital banks would come out. What will be the regulatory framework around full stack digital banks? And that's the reason. If that comes, I think this fintech growth rate that you see, that the market will go to $1.3 trillion, can go anywhere to $1.5, $1.6 trillion, just because the way insurtech or lending or investment are supposed to grow, the neobanks would grow at a much faster rate once there is clarity on full stack digital banks, even though we know in a very limited manner that it will be a stage-wise process wherein first limited assets and liabilities things will be taken care of, and then in the in the regulatory framework, they will assess how are we faring, and then full licenses will be granted. But I think if that comes into picture, full stack digital banks, then it sounds a utopian reality, but I think it will come out very nicely to a lot of players' traction in the ecosystem, how they then pick on the digital banking license out there.
Thanks a lot, Apurva. So, just a follow-up question on that. What we are talking about right now is basically going, wide network always helps us. And there are steps we take to create a wide network, and maybe very, very quickly as compared to the earlier ecosystem. We go very fast, we partner people, and we latch on to their networks. In this particular space of fintech and startups, when funding is also becoming a play, what do you think is more important at different stages of a startup? Going wide or going deep? By going deep, I'm talking about solving a particular problem which maybe has not been solved or not been solved to that extent for the people. Like what you were hinting at, Swapnil, and sorry I cut you there, but I think this is more relevant when you say that I am solving a particular problem when it comes to people traveling abroad. So if you can take this first for us, it'll be nice.
Yeah, the way I see, I mean, both of them actually exist. And see, it generally starts from a broader market, or say going broad first, and then basically looking at the different, niche problems to solve for. Think about, say, I always say, well, it's like Flipkart started with a very broad base first, but Big Basket came in, solved one problem which was big enough, just delivering the grocery part, right? So same way I see in terms of evolution of this whole fintech part, traditional banks were there, but they were not, and it's also a regulated industry, right, where we have to play by the rules of the regulator, and as such, not like we can just go and do anything which we want to do. And there will always be players like traditional banks until unless we get into a mode of digital banking, where you can go completely by yourself and solve whatever problems you want to solve the way you want to solve, right? Now, in between, if you look at traditional banks happened, and after that there are like niche techs which came. Apurv was talking about, say, wealth tech, right? Multiple companies were there, insured tech. They're just solving just one vertical among the banks, right? It's if you look at the banking needs of the customer, they want payments, they want savings part, lending part, the investment part, insurance part, everything, right? But there exists like at least a big company in each vertical of these. But now, like in between, because traditional banks were not solving properly those problems, and that's why these companies came in, right? So now basically it's the time for neobanks to go, because all banks are ready for the APIs and everything. Right. Now we can go broader, and still it will exist all those the niche companies as well.
So first identify a problem, solve it, and then go wide.
Yeah, we are tackling it going deep. Obviously, I already talked about my target audience. But at the same time, when I'm talking about an underserved and unserved community, while I'm going deep in it, I see it as wide. 300 million people. That's the population of US out there. So, we can just target a specific niche, but going deep in it is one way to tackle it. But in India, each deep segment is itself very wide. So that's something that we need to keep in mind.
Sure. Deepak, quickly, please.
Yeah, so my quick point is that I think it's a very unique to every company who is approaching it. It can be a wider problem, it can be an in-depth problem. Like for example, what Rupeek is picking as a problem is gold monetization. Gold monetization in itself is a $2 trillion opportunity in Indian market, right? The penetration for gold loan is still 5-6%. So the problem is large enough for us to just deeply focus on it, and if we solve it well, it can really help.
Perfect. Thanks a lot. Apurv?
Just the time is over, but yeah, as I said very nicely that every deep is very wide. When we started mapping out that, okay, if you intend to focus only on top 10, 15 cities working professional, you'll find, okay, there are 120 million working professionals in India, but who could we address to? You'll end up coming out at 30 million. So when you do all those calculations, I think let's look at the serviceable market. So I would say go deep. Go focus on the penetration. And as I've said, every niche segment is good, wide enough for you to serve and solve for.
Lovely. Thanks a lot. Thanks a lot.